Welcome everyone. How's it going? I got two familiar faces, I'm sure, to the majority of the community, probably 100, close to 100% of the community. Dave Lee and Emmet Peppers, thanks for coming on for today's Friday Power Hour hangout.
Yeah, good to see you, Yashu. I got one announcement to make. I am getting a haircut on Sunday for anyone who's wondering.
Awesome, man.
But we start today with what? The stock's right about even, flat. Let's see what our juju powers can do, I guess, right, Yashu? We'll see.
That's right. I got the orange, and there might be a positive correlation between your hair length and Tesla stock price. So I don't know if you want to go ahead and cut that just yet. If you
Okay.
do, and Monday we gap down, I think everyone's coming for you then.
Yeah, yeah. If it drops like 10 or 20 bucks while we're talking, everyone's gonna say shave it right away, to get it maybe shaved.
Awesome,
Yeah.
awesome.
Yeah.
And thanks, Dave, for coming on too.
Yeah. Fun time always to join on an epic week here. Tesla. It seems like almost every week especially it seems like every Friday there's a bump, or every Monday there's a bump up, and then Friday we're closing at these all-time highs. I kind of wonder how long will this last? It always feels like, could this be the last week of this epic run for Tesla, or can it go on? I don't know. I mean, it seems like the longer it goes on, the higher the probabilities are that we go sideways, or do some type of retracement a bit. But yeah, Tesla's defying all logic right now, and yeah, it's going through a massive run. So yeah, would love to chat about it, and yeah, thanks for having us on, Ashu.
Awesome.
Yeah.
And you know what's funny is it's all in our expectations. I actually pulled this up. Let me share my screen here with you guys. For everyone watching the stream, they can see it. Funny you've mentioned about the Monday. There is a site out there that actually conglomerates a lot of this data, and you can see the percentage of green days on a Monday for Tesla. And it's by far the highest, definitely on a Monday, about 53% win rate in terms of being green on a Monday.
Wow.
And Fridays look like they're probably close to the bottom. Fridays or Wednesdays, actually, funny enough.
Wow.
Oh
Yeah.
yeah. So I was calculating the past 4 weeks. So just 4 weeks ago on October 8th, Tesla closed at $785. So we've been up 56% just in 4 weeks. Yeah, it's incredible.
Yeah, I mean, there's got to be some kind of retracement sooner or later, right? I mean, like you were saying, Dave, sooner or later, I mean, the best case is we start trading sideways for a while sooner or later, and we don't have like a 20 or 50% retracement or 30% retracement. But I don't know. I think most growth stocks, if you look at their charts historically, a lot of times it seems like after a big kind of like up move, there's usually some kind of bounce back, to some amount, 20% or 30%. And so hopefully this live stream isn't the start of that. Right now that's down $4, and since we started talking.
It's also worrying though, in well, to a degree. I mean, it's worrying with the general context that like we've been blessed with what we've had. If you look at
Yes.
the macro market for a second, like just the Nasdaq on a daily, like if you check this out, the Nasdaq's obviously hitting all time highs. S&P's hitting all time highs. If they, and I think to a degree where they're actually passing outside of the Bollinger Band. I just saw that on our Discord. And so if macro takes a healthy correction, which I think in the long run is probably what's going to happen, uh,
Yeah.
like who's to say Tesla doesn't follow the trend on the downside? How are you guys playing the downside, or how like are you wanting to do covered calls right now? Are you guys wanting to sell premium? Like, walk me through what you guys are thinking around there.
Yeah, it's funny you say that. I was just talking to Matt, who you had on Wednesday, about that with our fund, and we're exploring different options around that. Um, it's hard to do, tax efficiently when you have long-term call options you've owned for less than a year. In the U.S. at least, it's difficult to hedge that in a way that doesn't reset the holding period. So um, that's one issue we've come across. That's sort of, I tweeted out like, what are some stocks that are highly correlated to Tesla just recently, kind of trying to search for some other
Mm.
ideas of how to hedge some of our upside that we've gotten on some of our long-term call options. So I don't know what you do to hedge it. I mean, if you have just shares, you can just sell qualified covered calls, or you could buy puts, right? But if you have long-term call options, which I'm imagining a lot of people here do have, it's hard to figure out the best way to hedge it. I'd say, given the tax, efficiencies you probably want if you're in the U.S. I don't know. Do you have any thoughts, Dave?
Yeah, I mean, I don't know. I'm in the, I think, fortunate position where, I hold basically almost all stock and I just wait out the volatility. And my thesis is over the long term, as long as Tesla executes well according to their crazy ambitious plans, like that's the whole thing. It's like Tesla to me is a long-term play where they have such ambitious plans and fast growth plans, and they're in like some of the largest markets in basically the history of the world. You have transportation, you have energy, you have labor, artificial intelligence, and a lot of these things are so early on in the early stages. Even with transportation, like Tesla is like, they haven't even delivered 1 million cars in a year yet. They're just still in the infancy stages, right?
Mhm.
And energy is the same thing. So I think with a company like this, my approach is you monitor their execution. If they keep their crazy ambitious plans and they keep executing, ruthlessly toward those plans, I think you just, at least that's my opinion, you just hold and you ride it, and you don't worry about the volatility that much. You accept the fact that it could go down 50 or 60% in a year unexpectedly. And there could be actually no rhyme or reason to it too. You think that you could figure it out, but a lot of times there's, these hidden buyers or hidden sellers that you don't know about until like 6 months later.
Mm-hmm.
And I think that's the reality. It's if you could stomach the volatility, then actually like you could just enjoy the ride. And I think in the past 10 years, like that's proven to be probably the best way, I think, to hold Tesla is not to get too, up when it goes up and not to get too down when it goes down, just to focus on the company. And then, and I kind of think, it's probably, in my opinion, probably the best way to hold Tesla in the next 10 years too, for most people. If you're the outlier, the 1% who can really trade the ups and the downs, then more power to you, It's like, if you can somehow read like where Tesla is going, like that's the reality. Is I think a lot of people, when they start out, they think that they could read it or other people could read it. But the odds of, I think, people actually being able to read accurately, like short term, like the next week, the next 2 weeks, the next month, it's so ridiculously hard. And there are certain times where you think you could read it and you have the better odds. And I think, that could be an opportunity. But I think generally speaking, on a normal day, a normal week or month, it's like it's anyone's guess, on how the stock is going to perform. On a side note, it was interesting. I was looking at my calendar and I have like gone, I'll show you guys. Oh, I'll look at it here. December 1st, it says buy Tesla leaps and calls. And so what happened was earlier this year, it's like I think in March or April, Tesla stock was going down. And I was telling my wife, I'm like, man, next year is going to be crazy. It's like with Austin and Berlin, and their profits are just going to go through the roof. And it's going to catch everyone by surprise. And my wife's like, oh, let's buy calls. Leaps. And I'm like, it's like kind of pricey right now. And she's like, okay, let's put it on our calendar. I'm like, yeah, okay. Probably want to wait till, kind of the enthusiasm is all sucked out from the previous February or January highs. And so I'm like, okay, maybe December would be a good time. And so we wrote that down. And it turns out we're just like a little bit late, like a couple months. A couple, and I think part of it is this Q3 just surprised people because you had this intersection of the chip shortage, Tesla raising prices, all the other automakers struggling, and Tesla delivering just amazing numbers. And I think it just hit 1 or 2 quarters earlier than most people expected, even like for myself. I thought that the quarters would be like starting like the first Q4 of 2021, so in February. So I thought that would be the catalyst quarter, But it turns out it was a quarter earlier in November. It turns out to be the catalyst quarter. So interesting stuff. But what the big question for me is, okay, we've got this catalyst quarter. For me, it came a quarter earlier than I expected, but my expectations for 2022 have been really, really high. And so if we've already experienced this 56% jump in 4 weeks, and next year is just record quarter after quarter after quarter, then what's going to happen to Tesla stock? It's just like a question mark right now because like it's already jumped so high. So it's going to be definitely an interesting 2022 for sure.
Yeah, that's exactly what I thought for much of this year after the run up into, S&P inclusion, the previous run up, and we did trade sideways for the most part for, almost 9 months. And then now there's another run up. So yeah, I mean, I wonder if what do you think, Yashu?
Well, that's kind of my question is how much of this is front running of Austin and Berlin and really awesome margins yet to come, which by the way, I think Q4, Zach said margins might take a little bit of a hit temporarily, which is fine.
Mhm.
But how much of this do you think is front running versus how much of this do you think is an unlocking of the ability for fund managers to buy Tesla, like we're talking about with kind of their credit increase and maybe hitting a threshold of gross margin and like kind of putting them in a tier of not automaker in terms of margin, and now in kind of approaching what might be tech-like margins.
Mm.
How like if you had to discern between those two, like the stock price increase 56%, I think Dave you said in the last month. How much of that do you think is Austin and Berlin coming online? How much of that do you think is something else?
Yeah, I personally think I don't think it's per se Austin and Berlin that much. Um, I think it's a lot of it is the margins.
Yeah.
I think when you put yourself in the mind of a typical portfolio manager, they're typically risk averse. That's why they're portfolio managers. They manage a portfolio, and you diversify to get some type of protection. Because you're holding 30 or 40 names or so, and typically Tesla has been one of those companies where you just a typical risk averse person just doesn't want to hold because it's too pricey. They don't believe in Tesla's competitive advantage. They
Mhm.
look at Tesla as an auto company. They think, competition is coming. There's so many factors. Elon Musk is a enigma to them. So the typical portfolio manager is going to look at Tesla and be skeptical. And they were forced into it with the S&P 500.
Mhm.
And you saw that big jump, but then you still had a bunch of holdouts, as Gary Black mentioned, like we're going underweight Tesla. And I think this Q3 with the margins coming in at 28.8% without regulatory credits,
Mhm.
and then their operating margin like almost, at about
14.
15%.
Yeah.
Yeah, that's just insane
Mhm.
because that's without Austin and Berlin, right?
Right.
And so you have to think about it, and without the EV tax credit in the US. And if you have Austin and Berlin ramped and you actually have an EV tax credit, it's like this stuff is just going higher. And and this is the point where it seems like the portfolio managers are finally able to run the numbers. They're like, oh, whoa, like you double revenue, the next
Mm.
2 years or so, or less, in a year and a half or so, and you increase margins, and they're already, bringing in EBITDA over 2 billion. Like this is just going to go through the roof. And there isn't a, 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 a company mega cap that's like in a safe kind of S&P 500, type of level, that I think is growing this fast, that offers this type of upside, And I think the downside always is the risk, but then I think there was apparently a huge risk off with this Q3 that changed the story. And then I've been telling people like it's part of the story is people like they always look forward a few quarters to see if there's anything coming up that's risky so that they can wait a little bit longer to de-risk, right? But with Tesla, you just don't have that for the next several quarters or 1 or 2 years. Every quarter seems like production is going to go up. And then the business model of Tesla is if production goes up, the revenue goes up, margins are good, their operating expenses don't go up that much. Like I was telling someone this past week who called me up and he's like, oh, it's like, isn't Tesla overvalued? And I'm like, yeah, one of the secrets is that Tesla's operating expenses, they were just like before they ramped Model 3. Um, um, Before they ramped Model 3, their operating expenses was a little less than $1 billion per quarter. This was before they even started one Model 3, production. And right now they're at like what 1.6 billion per quarter. And if you
Yeah.
think about it, how is that possible for Tesla's operating expenses only to go up, like
60.
60% or so or whatever after ramping Model 3, Model Y, Fremont, Shanghai, getting ready for Austin and Berlin. It's almost insane the level of leanness that Tesla holds in their operating expenses. I think that's the key part of the business model that most people still don't understand or get. That Tesla, like you think that, okay, Tesla's going to double revenues, at least you think their operating expenses has to double or go up a lot, right? But Tesla has showed consistently over the years that for some reason, they're just so focused on efficiency that their operating expenses are not growing that fast. And I think it comes down to also this basic thing is the Tesla business model is interesting because every factory that they put online, the factory workers all go into cost of goods, meaning it's not part of the operating expenses. So let's say they hire 10,000 whatever Berlin workers, all of those workers' wages basically go into cost of goods, which basically is like when you make a car, you have the cost of materials, right? Of all the steel and metal and supplier parts, and then you have the labor, right? That takes to assemble and do all that stuff, and then you got depreciation, amortization of all the equipment, etc. And you pull all that together to get cost of goods, and then you minus that from the revenue you get, and then basically you get a gross margin figure. Right. So when Tesla has a 28.8% gross margin, that's including the factory worker labor, already in that figure. And so when they ramp Austin and Berlin, they're not actually increasing their core operating expenses basically at all in terms of all the extra factory workers. They might increase their core operating expenses because Austin and Berlin have additional other types of labor. For example, they have additional engineers, R&D. They'll have SG&A costs associated, but so there will be some impact with their core OPEX. But generally speaking, their operating expenses won't be affected that much at all by Austin and Berlin, which is mind-blowing. You think at $1.6 billion, because they're ramping two of their biggest factories with Austin and Berlin, you think their operating expenses would have to go up, right, to $2.5–3 billion or so. But that's not how it works. All of that, the tens of thousands of factory workers, they're all going into cost of goods, and so the OPEX is still staying the same. And what you get is you get this massive operating leverage. See, so the revenue doubles, but the operating expenses barely goes up. And so your profits just go insane. And this is what we're seeing in 2021. This is why the profits are so strong, because the OPEX is so contained as revenue is going up. And so the fireworks, in some ways, in my opinion, haven't even started yet, because Austin and Berlin are the most efficient factories, right? They're the next gen factories. The new equipment, the front, rear casting, structural battery packs. Once they get the 4680s in production, and we're talking about a completely different cost, structure for the Model Y. It's probably gonna be much cheaper than what it costs to obviously make a Model 3 right now, but longer range, they could charge more. But this just does amazing things for their margin. But their gross profits will just radically go up, but their OPEX is stable. It's crazy. So everything, all the extra gross profits basically flows through into operating profits. Yeah. Right? And so, and this business model, I'm telling you, people still don't get it, but at the end of 2022, I think people are going to start to get it. Second half of 2022, people will start to realize that Tesla has just one of the craziest business models out there. And the growth that is projected is people haven't yet understood exactly what that means, to their profit. But I think 2022 is going to show a lot of things.
Yeah, I just YOLO'd into a call option of Tesla 1235 strike today. So
right now?
Yeah, right now.
On that monologue.
Yeah, I was trying to get into I was going down, but now it started going up. I was like, I'm just gonna chase it now, and now it's coming back up. I just bought a few, but I'm
12
curious.
What's your rationale?
Oh, those
I
are
mean, I don't know. I think there's, we got 30, 40 minutes, maybe if there is some truth to this gamma squeeze stuff, maybe there will be some buying. And, after this last big sell volume downtick at, a couple minutes ago, maybe it's just going to start creeping up to 1240, 1250. And I'll make a quick 5X or 10X on a small little bet. But, it's probably like, in my mind, it's like a 20% chance, but, of getting a 10X return. That's how I think of it,
Yeah, those are too expensive. Those are too expensive for me. That's big boy money for you guys. So, yeah, I don't know, 4,100 per contract. Here's the thing though, with the gamut and Dave, by the way, that was amazing. I think you should also we should first of all, someone should clip that, and that should be a video on its
Yeah,
own.
that was a great. I mean, we've gone over this in a lot of the chats you've had, Dave, but you just summed it up right there.
Yeah, it got me fired up.
Their big advantage for scaling.
And
Yeah.
and I also oh, go ahead.
So one other note here. So I did this post a while back on TMC Tesla Motors Club, but if you look at March, the first quarter 2017, their operating expenses, Tesla's operating expenses was 925 million. Okay, so this was before Tesla started Model 3 ramp, which is Q4 of 2017. They basically delivered their first consumer cars. So before they started Model 3 ramp, their operating expenses was at 925 million. So Q4 2017, they start to ramp. Q1 2018, they're really ramping Model 3. So they're pushing this out. And Q1 2018, their operating expenses was 1.05 million. So if you look at that, the operating expenses basically went up like a little over $100 million. But this is going from 0 Model 3s to, like ramping Model 3. And you ask, like, how is that possible? And it's possible because all of the ramping costs, like they're going into different, they're going into either CapEx, right, which is their factory, their equipment, all that stuff. But that's not really showing up on the profit loss, because that's just like investments that they're doing, and that's showing up through depreciation and amortization, right, on the cost of goods, that side. And then you have the labor, the assembly, right, and all this stuff. That's going into basically the cost of goods. So it's not even increasing OpEx at all, right? The only thing that's increasing OpEx is if Tesla hires like more R&D, engineers and all this stuff, or more SG&A, more salespeople, more stores, and all that stuff. But otherwise, their operating expenses are just are crazy. Like they can literally go from no Model 3 ramp to Model 3 ramp with barely increasing their operating expenses. Right. And this is what's going to happen for, I'm not going to say their operating expenses aren't going to increase at all. But they are, as they hire more battery engineers and AI experts and all this stuff, and increase store footprint, all this stuff. But what I'm saying is that for each new factory and with each new model that Tesla releases, that OpEx is staying generally the same, but the revenue is just going up with each new line. Right. And that just means all that extra gross profit is going to go pretty much straight through into real profit. Yeah, it's crazy, man.
Yeah, gross margins are going to get monstrous. For the coming quarters. Yeah.
And that's what, that and 4680s, aside, right, is what Dave's saying even. So, by the way, 4680s, what's your guys' timeline on those coming into production? I know we're told middle of 2022. Do you guys have expectations further out than that?
I don't know. I mean, I just follow, what the everyone else on Twitter, the expert, the rumorvilles, whether it's Galley or Sawyer or limiting factor. He does a lot of great, interesting analysis on the batteries and such. It seems like they just got some materials delivered to Giga Austin, right? So it seems like they're getting closer and closer, and all the doubt is kind of unfounded. Obviously there's delays a lot of times, and they kind of built that into their expectations, but it seems like it's pretty close, maybe a quarter away from starting production of 4680s at Tesla Giga Austin, maybe a quarter, maybe 2 quarters at most is my guess, if I had to guess. But I don't know, Dave, what do you think?
Yeah, I don't know. It seems like I think we had some pictures of the anode equipment or something getting delivered to Austin, I think. So it seems like, they're starting to put some stuff, but then it seems like think the cell buildings aren't completely finished. My guess is like the ramp will be kind of slow. Like the first 2 quarters will be. I mean, that's the thing with ramps. Like they're slow because like you don't want to make you know 50,000 cars and have to go back and do a crazy recall,
Mm,
Yeah.
or
Yeah.
mess up. Like you want each car to be like when you find a problem, you want to stop and fix it, and that
right.
all that stopping and fixing takes like time. Um, so actually, like a slow ramp is people should be happy with this a slow ramp actually because they're just fixing all the problems right now and not later, which would just be more costly. So I think actually best case scenario for me would be Tesla does actually a slower than expected ramp in Q1 and Q2,
Hmm.
and hopefully the numbers maybe disappoint Wall Street a bit, and we could see some consolidation before the second half. But who knows? Maybe Tesla is sandbagging a bit, and they're like going full steam ahead, with Austin and Berlin. Berlin seems a little bit delayed with this whole, environmental like
Yeah.
deliberation, thing. Elon didn't seem too happy with it, but
No.
yeah. But back on 4680, I would expect again, like first half is just kind of slow ramping, and then second half is going to be the fireworks. I think for Tesla, Austin and Berlin.
It'll
And
be a big year.
it'll definitely be a big year, and actually, it might be a big week next week as well. Rivian is coming out; it's IPOing apparently next week. Are you guys interested in Rivian as a company, as an investment, as something to watch out for? Obviously, valuation is absurdly high. I think it is announced at 70, which means it probably will come out closer to 100 or something like that by the time it's all said and done. Thoughts on Rivian, guys?
Yeah, I think Emmet kind of biased me against Rivian the other day. So we were talking about it, and he's like, he wouldn't touch Rivian even at like what 5 billion market cap or something.
Yeah,
Whoa,
five
really?
billion. Maybe I'd take a flyer on it, but yeah, not at 50 or 60 or 70. And by the way, I just heard like a rumor, unofficial rumor. I live near where I took my Model S Plaid to do the drag strip when I first got it. The same raceway. Apparently, I heard a rumor that Rivian brought a bunch of their trucks up
Hmm.
recently in like the last few days up there to show it off and test them out, and they were breaking down left and right. And
Oh, oh,
yeah, it was
Wow.
just not a good scene apparently. So I don't know. That's just a rumor. I don't know. I can't verify it, but yeah, I think that they're a niche player in the electric vehicle space, and that same with Lucid. But Lucid's got all the Saudi wealth fund money behind it. I think they own like 70 or 80% of it, even though it's publicly traded, right? So they can just throw a little bit more money to squeeze the stock up however high they really want. So
Mm,
I don't know if that's what they're doing. I don't know what's going on. You look at the volumes of Lucid lately
hmm.
and out of this world. So
Yeah, Lucid hit 40
um,
bucks today, wasn't it? Or what did
yeah,
it hit
yeah,
now?
another volume day. I mean, what last time we were talking, it was like 350 million shares or something traded on the day or something, right?
Yeah, it
And
was
it's
crazy.
100 million. Their average volume is like 30 million shares.
Yeah,
Now it's up to 40 million from a few big days, but
yeah,
something weird has been going on with Lucid lately. Maybe some mini gamma squeezes going on or something. I don't know, but
perhaps. Yeah.
perhaps. But Lucid and Rivian are both
Mm.
they're not going to get past that. I would put my money on them not passing
Mm.
the event horizon of mass production that they have to get past in order to be successful.
Yeah, I definitely agree with that sentiment. Here's where I'm divided though is I think the market will and always in the definite future at least give a premium to EV only companies. So
Hmm.
whether it's Lucid or Rivian, like there's not like when legacy autos come out with EVs, that's great. It's awesome. We love to see it. But they almost have this level of baggage to them when they come out with EVs. It's like they have to cut off their own hand to eat it. And when you have a pure EV play, and I guess nickel kind of tainted this for everyone, but when we have a pure EV play and it's legitimate and they're coming out and yes, production is going to be hard. There's almost like this level of like, well, if I missed out on Tesla, I'll just buy into a pure EV play like Rivian or Lucid. And so, though the company is debatable how they're going to come to mass production, I think investors or just lay investors, even like us, like me at least, speaking for myself, between you, us three, we're always going to look towards those companies as a cheaper alternative. And I wonder how much of that sentiment drives home with just retail folk.
Yeah. Yeah, I mean, there's a certain amount of time where it's going to carry weight just being a pure EV company, but at some point, consensus will understand that it's next to impossible to mass produce EVs successfully, and you'll have some Chinese EV players that might get exported around the world in addition to Tesla, and maybe someone like Polestar or Fisker, maybe Lucid, maybe Rivian, maybe one of those people will make it, but I think the vast majority won't. What do you think, Dave?
Yeah, yeah, it's a tough one because Tesla has just sucked the air out of every single market that they're in. So
Yes.
the whole Model S and X market, the Model 3 and Model Y market, it's like to get any traction, you need to beat Tesla. You need to have a significantly better product. Because here's the
Yeah.
thing, it's like with cars, like safety and reliability are a big deal.
Yeah.
So Rivian doesn't have any history with safety or reliability, used car prices, etc. So you might get like early adopters to buy their cars, but after that, you have to win. You have to beat Tesla at its own game, and you have to show that somehow you're significantly better. But how can you be significantly better if you can't mass produce your cars at least 300,000 or 400,000 per year per model to get the economies of scale? So your cars are inherently going to be pricier, right, than Tesla's cars. And I don't see how you can escape that. It's like the chicken and egg problem. Like in order to beat Tesla, you have to have a cheaper car that's better than Tesla. But how do you get cheaper if everything you can't get the economies of scale that you need to make it cheaper? So yeah, it's a tough one. I think another thing is you've got these like Chinese automakers, and some of the things like they're doing out in China, it just feels like that's kind of the way to do it. For example, like XPeng with their new P5, it's like coming out at like $25,000, US.
Crazy. Yeah.
And it's like a nice, kind of, it's a big car too. It's not the fastest car, etc., but it's like a Camry type of size. It's a nice size car. But I think what these Chinese auto manufacturers are doing is they're leveraging the supply chain and the cheap parts and manufacturing ability of China. So this is what Tesla experienced in China. They experienced, wow, first like China can build fast. Second, like they've got this crazy domestic supply chain that can just basically produce anything, and they could produce it at super cheap costs. And that's why Tesla Shanghai is doing so well. It's because China is probably one of the best manufacturing hubs, right? It's probably undoubtedly, hands down, the most advanced and cheapest manufacturing hub in the world, where you can basically do anything, there. I think that's where Rivian and Lucid, where I wonder, like, it's like XPeng and NIO, these guys are already tapping into hundreds of Chinese suppliers and creating their own super efficient supply chain where they're already able to produce a $25,000, compelling electric car. And where is Rivian in all this stuff? Like, how many steps do they need to go to be able to even get to that place, where XPeng is right now? Yeah, I mean, XPeng has a long road ahead because, I mean, if they're going to try to sell their cars in the US, they have to build up a long history of reliability and safety and reputation and all that stuff. So I don't expect XPeng to be like a big competitive threat to Tesla in the near future, especially in the US. But yeah, I don't know. You need to attack the angle you need to attack things in a different angle. It's a different story. You can't just try to rehash Tesla's playbook of going from, like high end down. Like you've got to play a different competitive advantage. I think XPeng and NIO saying, hey, we're going to play the Chinese manufacturing efficiency, angle. I think that's a smart angle, like, but yeah, I don't know. I'm a skeptic long term with Rivian. Short term, it's like, I don't know. It all depends on institutional demand. How much they are wanting exposure to a play like Rivian. And I agree with you. Actually, like people are always looking for value plays, like wanting to do any, like they're wanting exposure. And they look at these things as, hey, this industry, the EV industry is growing at a certain rate, and there are these type of players that get exposure. So you get exposure to Tesla, and why not get exposure to Rivian or Lucid as well? And
yeah,
so who knows? There might be some some decent demand, but we'll see.
I think what's interesting is you have something like Fisker. We know Henrik Fisker this is like his third rodeo building an EV play. That company just signed a deal with CATL, legitimate 5 gigawatt hour, I think, battery deal, and they're planning. They just had their earnings like yesterday or the day before, and they said that they're still on track to deliver their first car, the Fisker Ocean, November of 2022. So it's like a year away, but look at the difference in the market cap valuation from Fisker to Rivian, right? I mean,
Mhm.
5 billion or 5.5 billion versus 55 billion. That's a 1 to 10. That's a huge disparity. And I feel like they're on the same level of like chances of success. So I don't know. I just think the valuation of some of these companies is insane. I'm not saying Fisker is going to be successful, but at a 5 billion valuation, it seems like, okay, maybe it's worth a flyer versus, Rivian at 55 billion. And that's the IPO. It's going to probably start trading just from enough retail investors demand of trying to buy it. It's probably start trading at like a 70 billion valuation or more. And then you'll have the book runners and such, underwriters, they have their mechanisms to kind of keep it propped up, not going below the 55 billion IPO price, right, for a while. So it's just kind of crazy. I think I said it once before. It feels like Tesla was just there like 2 or 3 years ago at 55 billion market cap valuation. It's like a spit in the face of Tesla investors when you have these like Rivian and freaking Lucid at higher valuations than Tesla was 2 years ago. It's like, what the heck? Like
Mm.
the world's backwards now. It's so weird. Yeah.
Yeah, I think
Yeah.
there's definitely a degree of like a dollar even 2 years ago is like $2 now in terms of just inflation speaking, and like valuations are going to get absurd. I think in the next 4, 5, 6, 7 years. I think when we talk about trillions of dollars in terms of market, I think there's going to be like double or triple the amount of trillion-dollar companies that there are now in even 2 years. I think. Um, but the question, we got a super chat question here, and by the way, thanks for all the super chats coming in. Paul asking, do you think BYD will be successful in the future? If you guys have any takes on BYD, big in China.
Yeah, I mean, personally, I just don't have enough on the ground information. Like that's important to me. Like I want to know exactly like what's happening. Like what is the consumer sentiment for these vehicles, whether it's Xpeng or Neo, Li or BYD, etc. And yeah, it's tough when it's in a different country and you just aren't there on the ground. And so I don't know. From what I see, I kind of have been kind of tracking a little bit more of the Chinese automakers the past several months. I watch Xpeng's like all their live streams and trying to get a sense of what kind of company they are.
Mhm.
And yeah, with Xpeng, I'm actually decently impressed. They're trying to be a tech company. Um, like I think they could be a little bit overly I won't say naive and ambitious, but they've got this like flying car example, which they
Right.
say they're going to make in a few years, but I just don't see it happening. Um, but yeah, and I don't see their full self-driving plans being as effective as Tesla, obviously. But yeah, I like how they're driving down costs and they're trying to create like a compelling vehicle. BYD, I don't know. It just seems like they're kind of a bit old school in their car designs and all that stuff. And then before BYD had this, battery advantage, but now you have CATL really becoming the preeminent kind of battery supplier in the world now. They seem to be combining this combo of innovation, which are bringing down costs together with the ability to scale. And they're like pretty much come up the past few years as kind of the top player. And then, so that's why you can have like players like Xpeng or Neo or like Emmet, you're talking about Fisker, they could partner with a CATL and actually have a great battery pack, for a cheap price. As long as you're able to solve everything else,
Yeah.
Yeah.
CATL seems like a very strong player for the future of batteries. I mean, I know Dave, you've looked into them a little bit, right?
Yeah, definitely. I'm a fan of CATL. I think the race though is to a place of mass production, right? You need to get to like this 300, 400,000 cars a year in order to tap into the economies of scale, right? And so whoever's able to do that, the quickest is going to start to establish themselves as like a legitimate player. And so who if you look at the numbers, the monthly or the annual type of car sales, EV car sales right now. And if you look at who's close to this like 3 or 400,000, number per, let's say for a single model, not just total vehicles, EVs, but for a single model. I think like it seems like perhaps, I don't know if XPeng will do it with their new P5, but I think there's going to be a company that's able to do it, and that will be the second place, basically in EVs. But again, it's like you've got to have a different angle, where Tesla isn't at. You can't do like a Model 3 competitor. I don't know. It's just like you do, like XPeng is doing a $25,000 Camry economy car that
Mhm.
Tesla's not even in,
Yeah.
right? In a country that Tesla's not, not like
Needs to do something
in a
different, is your point.
yeah, yeah, like that you have space to get to 300 or 400,000 vehicles, right?
Mm.
Yeah.
Emmet, thoughts on BYD?
I was just watching my flyer get cut by 80% since I put it on. So
Wait.
that I hope no one followed me on that trade.
It was expiring today.
Yeah, expiring today.
Oh,
Yeah,
my
yeah,
bad. I
it's
thought you were buying
close.
the ones for next week.
No, no, yeah. It was a very small trade. I just thought we were talking last time. It would be cool to put a trade on at the beginning and see if it works out. But I guess we're not going to have the same type of return on our live squeeze
You never know.
today.
Hey, we got 20 minutes. Who knows?
20 minutes, yeah. Yeah, no, the thoughts on BYD is what you were asking, or
Yeah, thoughts on BYD. I know that at Good
yeah.
Soil, guys did an episode on this, but I'd love to hear your kind of.
Yeah, we chatted with Taylor Ogan. He's a huge fan and he's a huge skeptic of Tesla in a lot of ways. He's a fan of Tesla, a longtime follower of Tesla, but he's also very skeptical on their autonomous driving and 4680s and such. But so he's interesting guy, but he's a huge fan of BYD and has been. And BYD's come up, their valuations come up a lot, but they make, I don't think their margins are that great, and their average selling price car, I don't know if their products are like premium brand products, to be honest. I think it's kind of a, you know, I don't know. I mean, they're a big player. They could keep going up. Warren Buffett, has backed
Mhm.
them, and maybe they're a solid company. I just don't know enough. I'm not on the ground in China, but it seems like if batteries and electric cars are the future, it seems like there's going to be a place for BYD. So maybe it's not a bad idea. I think, what is it, like 150 billion valuation right now or something? Um,
BYD.
yeah,
I can pull it up here.
130 billion is what I see.
Okay.
So that's pretty reasonable. I mean, for compared to the total addressable market of batteries and electric cars being, potentially trillions in the near future. So, um, yeah, I don't know if they're doing anything in autonomous driving or robot. I don't know what their technology stack is, or if they're really more of just like a battery car manufacturer, though. I don't know enough
Hmm.
about them to know all their aspects of their business.
Gotcha.
Have you looked at them much, Yashu? Or
Not really. I've heard really good things about them though, and I think they are pretty lean. Whenever we talk about lithium phosphate batteries, iron phosphate
Mhm.
batteries, I think those are kind of the way to go. Cheaper, better. But on top of BYD, especially is I think is it with Chinese stocks in general, I've had a hard time personally with timing those.
Mhm.
I feel like whenever I buy into or invest into Chinese stocks, whether it's Neo, Baba, if there's a lot of political risk associated with, well, more relatively speaking, political risk with these Chinese companies. So I've stayed generally more away. That's not to say I think that probably means that there's alpha there that someone can expose, but I've generally stayed away from them. But
Yeah.
speaking on options flow for a hot second, just so we can take this back. We're sitting at 1221 on Tesla. I've signed up
Yes.
for this option service that kind of conglomerates options order flow together, and
Okay.
it draws it has two lines on this graph. One is obviously Tesla stock price, and then the other one is the algo flow score. So
Okay.
when you have this options order algos line above setting the stock price, the theory being that both of these are going to over time converge. So
Mm.
this is a bullish divergence of option order flow at the moment. Granted, it's been saying that pretty much since lunchtime today or 9 a.m. today Pacific time. So there's that. But in terms of next week as well, I'd love to hear your guys' thoughts on Gamma. And I know there's a Gamma section here, and I know Dave that you did this awesome interview last week with Spot Gamma. Thoughts on next week, Gamma squeeze potential? Are we overblowing it? Kind of your updated thoughts on that.
I mean, I saw that there's that tremendous that they put out a video after Powell was speaking about the tremendous volume of call buying in Tesla specifically. It was like historic, So something was, seemed coordinated with that in some way. Like it wasn't just like a bunch of random retail traders just like all at the same time after Powell speaking piling on Tesla call options. It was either some big whale, I think, buying up call options, or maybe like a coordinated effort of a few hedge funds or some Wall Street's bet forum of a bunch of redditors trying to pile in or something. It just seems something interesting with that. I mean, I don't know, it hasn't really played out in any interesting way. I mean, the stock has kind of, I think it was around what it was around, like maybe it was around 1180 or 1190 when that happened. Now we're at 1220, 1230. But the whole market's come up since Powell was speaking too. So it seems kind of appropriate that would be up along with the whole market. So I don't know how those options, I think they were for expiry end of this week, if I recall, based on the spot, or I'll have to look at that video again, but it just doesn't, I'm not sure how consequential that actually has been.
Not yet, maybe. Maybe
We
maybe
got
next
10
week.
minutes left.
Dave, what are your
uh,
thoughts updated on that?
Yeah, it just I mean, it feels this week is a little bit of a breather in a sense of we don't have this euphoria on Friday at the end of close, like compared to previous weeks. Like previous weeks there's like, for example, last week,
yeah.
when it went through the roof, you're almost like, oh my gosh, Monday is gonna be big. You just like
Yeah.
had that
Yeah.
feeling, right?
Yeah.
It's like today you just don't have that feeling, like that strength of like wanting to push through something just isn't there right today, at least. And I think there is a dynamic, perhaps at a certain point, it's hard to push higher. Like, for example, I think at like above 1200 right now, it's like a lot of price targets. The higher price targets are like 1200, whatever, maybe
Right.
1300, 1400 max. But
Right.
most people have their price targets probably between 1000, and 1100, 1200. So you're getting past the upper bound, upper range of the highest price targets right now.
Mm.
And that's where I think you get some bigger resistance where some people are like, hey, I'll dump and I'll rejoin, when it gets back to earth or something. And yeah, like you have probably portfolio managers who are like, hey, I got a good 10% jump, and that's great for my performance this quarter.
Mhm.
And once they start to feel like this is just way overextended, let's say it gets to over 1300 next week, I just feel like there'd be enough people to say, hey, I'm gonna cash in right now, book my profits, get in later. So yeah, I think we could. I'm not saying next week won't be positive, won't go up, or I'm not saying that. I'm just saying that the momentum seems to be kind of fading a bit, and we might be entering more of this consolidation, whether it's at
Mhm.
this 1200 levels or slightly down or up. I don't know, but um, that's kind of my thoughts right now.
You lose, and implied volatility rank, by the way, is sitting at 39 out of 100 for on a yearly basis for Tesla right now, and on a 13-week basis, sitting at 77. So there is some obviously some short-term volatility priced in. It just feels like, and I'm no, I no, my gut has been wrong so much in the last month, because when we first shot up to what, $1,100, and then we had a couple breather days, it really felt a little bit toppy, right? It felt like, okay, there's a lot of selling pressure at 1100. We've run up from like literally $850 in the last week. Like there's obviously going to be a breather, and then we just shot up again. So people are looking for this kind of third leg, this proverbial third leg, to come back in after two breathing sessions. Mondays have historically been really awesome for Tesla. Um, but I just can't help to, and a portion of me is like, okay, well, S&P sitting at all-time highs, the Nasdaq sitting at all-time highs. Like, coming into November here, if we even see a decent amount of sell-off, Tesla can get pushed back down. The question is, we don't know with price discovery yet where there's going to be a good amount of support for Tesla. Like when we first ran up post split from, even from 600 to 900 in a matter of a couple of weeks, we came back down to 550, but it took about a month and a half for it to sell back down. And over that, we kind of glossed over the fact that we just gapped from from pre-split all the way from like 1,500 to about 2,000 something dollars, and we just never revisited those levels. So just I'm trying to figure out what levels are the levels that we're gonna likely never visit for a long time on the downside, whether it's 850, 900, like are we gonna see those levels again? So I'd love to get your guys' thoughts on that. On how low do you think, if Tesla comes out with, if some bad news comes out, if macro kind of shits the bed next week or into quarter four, where do you think kind of a good base of Tesla demand might be?
I think there's like a 25% chance, a combination of macro headwinds and maybe some disappointment in Tesla specific combined and growth stocks, that we could get down to like 700s again. 25% chance. I'm not saying it's probable. It's probably not going to happen, but I think it's in the realm of significant possibilities that we drop 50, 40, 50%, 40%, from this point, but my 50-50 personal gut feeling over under is like 1,000, that we kind of get back towards 1,000, at some point. 50-50. That's where I would, if I had to flip a coin and put my money on an over under, that's where I would put it. What about you, Dave? What do you think?
Yeah, so I look at this. So we had a gap up.
Yeah.
A couple weeks ago. So Tesla closed, I think, at 910 or so, and then it gapped up to 950. And we've been on this terror of a run since. And the way I look at it is like, this is technically this is a breakout gap right now. And if you look at some breakout gaps, like they never have to be filled. And if the company executes well, like there's you look at Google's like price charts back in the day, like you can see like some breakout gaps, and it's just like they aren't filled ever,
Yeah.
And this could be one of those breakout gaps that just aren't ever filled. And I think there's a decent chance that I would peg it at, I don't know, probably 75, 80% chance we don't go under 950, right? This is maybe even higher than that. I just think that with the quarters ahead, and as long as Tesla executes, as long as there's no big downside catalyst or surprise, I think we probably hold this 950. I think the more likely thing is we hold at least 1050. I think 1050 is another pretty strong resistance there. I mean, 1,000. I think you have, 950 is. I mean, that gap. It just is the biggest technical indicator to me personally of a strong support that we've. So I would say that the lowest I see being kind of high probability is dipping to 1050 max. We see some resistance there, and then coming back up in case there's we need some consolidation or retracement. Under that, I would be more surprised. It's not obviously anything can happen, but I'd just be surprised if we actually fill that breakaway gap actually.
Yeah. And just on the other side of my takeaway, I see people saying like, Emmet, you were bearish when it was 800 that would get down to the 400. I'm not being bearish. I'm saying, if you think probabilistically about this stuff, you can't be kind of a binary thinker. And, I'm saying 25% probability gets towards like 700s, maybe when it was 800, I was like 25% probably gets to the 400s again, but that means it's probably not going to happen, but you have to keep in mind as a real possibility you have to prepare for. And so on the upside, I think we get to like 1,500 plus 1,500 to 2,000, 25% probability in the next few months, like that's a nice upside surprise. I think we can get to realistically, so there's a range of possibilities. You just have to kind of put the probability weightings on each one and think about it in that term and kind of apply that to your investment decision-making, I think.
100%. Yeah. Go ahead, Dave.
Yeah. So on that note, it was interesting is, I think for most people, it's really hard to think probabilistically. And one of the reasons is I was listening to this one video lecture of the Stanford neurologist, and he was saying how, you could look at things objectively, but it's really hard to make a decision. You get paralyzed into so many different possibilities objectively. So what people do is, in order to make a decision, they create some type of emotional bias or attachment, and then you make a decision, and then that emotional bias and attachment just gets stronger because you've decided on that path, and you're no longer able to see objectively anymore, right? I think that's the state of probably most people, where if they're involved or they invest in something, it's an emotional attachment right now, and they don't want to think about 20 25% probability going under whatever, going to 700. It's an attack on their whole position and idea, on their relationship, with this stock.
Their emotional attachment.
Exactly. And in some ways, like, it's natural. In some ways, it's what the brain does to make a decision. And in some ways, you need that emotional attachment to hold on to that decision, right? Or else you just forget it and just, move on. And so it's not negative. I'm not calling that negative per se, all negative, but I think in times where you do need to think probabilistically, and I think that this is where I think options come in, and more advanced type of like figuring out what to do. And like that, you kind of need to take a step back, detach yourself from the emotional, bias you have with the stock that you want it to go up, and look at objectively, like it could go up and it could go down. This is the reality. And there are times where I've thought the stock could go down like a higher probability than going up. And, but I mean, for me, I still hold because, of the number one, tax consequences. Number two, it's hard to get in to time at the bottom, the exact bottom. Number three, I'm okay with foregoing some of the hypothetical potential gains of timing every bottom and top if I could get into this generational, company that outperforms, in a major way. I'm just okay with writing that, like, I think people, here's the thing, is like, if you can get into a stock that does a 5 or 10x, in 5 years or even 10 years, that's an amazing return.
Yeah.
And if you can actually, consistently do that, it's like, that's amazing. Like, you don't need anything else, you don't have to dabble with, with little things here and there. If you can actually make big, big bets on companies that do extremely well. So,
So I have a question for you. If you think there's like a big, company that's like a big part of the future, right? And it's come up, the stock has run up so much, and like, it's kind of expensive. It's gone up so much. I missed the boat. And then suddenly, earnings or something happens where it drops like, 50% from its all-time highs. Like, that doesn't necessarily change the fundamental story. You still think it's going to be in the news for a long time. To me, that seems like a good signal to start buying long-term call options on that stock. I don't know. That's just what I think. I don't know. When that happened with Tesla in the past, every time it's worked out really well, except for, I guess, from 2014 to 2019, there was like a 5-year low where it kind of was in this range. It didn't really double from its low anytime for a while. But if you can time that right on any other stock that's kind of a, quote unquote, generational stock that's going to be around and big part of our lives for 10 plus years to come, then it pays huge dividends. I mean, I think there's a lot of opportunity in that if you can spot those companies, whether you're a big believer, there's lots of stocks that are taking huge hits recently and have been kind of high priced. And if some of those stocks, I feel like if they were on your kind of list of stocks that you feel like you missed out on, and all of a sudden some earnings or something happened where it's down like 40 or 50% from its all-time highs, and you missed it the first time,
right?
That's the time to get in with the long-term call options if you're going to play that card of the options. Or you could just buy the stock and be safer, obviously. But you could actually get a real return, like a 10x return in 1 year versus 10 years, I think, if you do it the right way,
It's funny. Oh, I was just gonna say, it's funny because that's when your conviction is really tested, is when that bad earnings report comes out or Elon Musk tweets this, is like, do you really believe in the stock at that point? Because self-admittedly, I've been in stocks where like, I have decent conviction. I tell that to myself, fooling myself into that I do. And then when some bad news comes out, I don't know how to interpret it, and the stock's down 20%. I'm like, maybe the opportunity cost of me sitting in this is not worth it. Let me switch. Right. And it's like, that's when your conviction is ultimately tested, is kind of in those times of turbulence.
Yeah. I mean, this past week we saw Peloton just get crushed.
Exactly.
Yesterday,
and
Moderna. Look at Moderna.
Yeah.
Zillow, some of these stocks
Zillow got crushed.
Snap a few weeks ago. Some of these stocks have been getting crushed after some like earnings news, and I guess you got to think about, like, do you really think these companies are going to be around for a long time? And if you do, there's no better entry point than after they've been crushed.
Yeah. And I was wondering, what's your take on Peloton?
Yeah. And we had a position, I think we publicized, we had a small, my fund, we got out of it a long time ago, thankfully, but I don't know enough about, like, we never had a big position in our fund on it, to be honest. It was pretty small relative to the rest of our positions, but um, I don't, my wife has a Peloton and she rides it. And my one concern, I mean, she loves it, but the main thing she loves is like she rides with this rider, Cody Rigsby is the guy's name. And she's like a big fan of, right. And I'm like, if that guy switched to like an Apple bike, would you switch? Like in a heartbeat? She'd
Right.
switch from Peloton to that. So it's not Peloton. It's like the content on there of the creators or the people that are the instructors that make it fun that she's most enjoying. And I think some people, I don't know if everyone, but some people have that attachment to it as much as anything. And so, I don't know enough about their business model. I mean, I think they're going to be part of the future, but they've just dropped like 50%.
There's the bell.
There's the bell.
Sorry, a bit loud. 12:21.
12:20. All right. That's not too bad. Yeah, it's not too bad. I'm happy with that. I'm very happy with that. I mean, I was thinking, I told you, Yashu, before that I thought this is going to be the day we're down $50 when we do the live stream. It's going to be a big Debbie Downer talk.
I mean, we only finished down $8 on the day, which, to some in the comments is sounding like it's a lot, but it's really not, right? Like,
no,
we're
not.
Pretty much flat on the day.
That's really good after an up move. That's really good, like a sign of sideways consolidation versus downwards consolidation.
Absolutely. And I mean, volume today was pretty subdued. I mean, 21 million shares only traded on the Friday. Pretty low, no?
Yeah, pretty low. Yeah, relative to the last several days and weeks. Yeah, for sure.
I think one thing is more probable than not, in my opinion, is that a big move is probably coming in Tesla, whether it's another leg up or another leg down. I have a hard time thinking we continue to flirt in the 1200 range for the next couple of weeks. I feel like we either retrace back down to whether it's the 9-day average, which is 1150, or we have another gamma squeeze back up or whatever squeeze back up. But one question on the leg up side that I wanted to ask, or I wanted to highlight and maybe and get your opinions on is Tesla almost has like this ratcheting in effect of up moves, right? Being in the S&P 500, having funds having to be equal weight, when they rebalance, when end of quarter comes through, a lot of funds, no matter what Tesla price is, and obviously the more Tesla goes up, the higher market cap it goes, the higher market cap it goes, the more weighting it's going to have in the fund. It's almost like this self-fulfilling prophecy on the upside. We almost like see this ratcheting in effect, right? How much of that do you think might play into the next couple of months?
I think there'll be some of that. Might offset some of the shorter term speculators that feel like the momentum's worn off and would sell, will be net sellers. So maybe that'll kind of even out and hopefully make it more flat. I'm wondering versus just a downward, when the stock is out of the news and the momentum stopped, there's a lot of short-term momentum traders that lose patience and they're like, I'm going to sell and move on to the next thing. Right. So maybe to offset some of that, or who knows which side will be greater, but there'll be on both sides. There'll be some net selling for that crowd of buyers that have been buying, and there'll be some net. Those are the net sellers. I mean, there'll be net buyers of people rebalancing to get equal weight Tesla again. Yeah. What do you think, Dave?
Yeah, I think so. Obviously, there's scenarios for both up and down, but I think one potential kind of positive angle is Tesla's kind of the stock, let's say, addressable market. Who's the buyer of Tesla stock? I think it's actually has increased a lot this past year. Where if you look at just a year ago with the S&P 500 inclusion, it's like the stock was not really completely mainstream in terms of institutional holdings and across the board. It was a risky stock,
Yeah.
And it was kind of surprising that S&P 500 index was forced into buying this stock now that it's so risky. But now fast forward a year later, improving profits. Like how many quarters in a row has Tesla delivered a profit? Probably 8 or so, or 9. I don't know. It's been a lot of Yeah, it's like you just expect it, right? Tesla to deliver another profit and to grow their profits over time.
We expect it, but maybe there's institutions that haven't expected that. Yeah.
Yeah. But then you get this kind of crowd of every quarter that goes by, the people that Tesla becomes an acceptable investment to hold grows, Like, for example, I remember several years ago, like whenever I call one of my brokerages for something, they look at my account, they're like, "Oh, whoa, why do you have like only Tesla?" So isn't that risky, right?
Yeah,
They
yeah,
just want to share their personal opinion,
yeah,
just it's like, are
yeah,
you sure that's what you want to do?
yeah, yeah,
But now they just go, "Oh, okay, you have Tesla." It's not that big of a deal,
Mm.
yeah,
as several years ago. I think it shows the changing mindset on Tesla as a company, and I think because of that, you have not just S&P 500, but you have a growing number of people, and yeah, if Tesla gets better credit ratings, that helps.
Mhm.
More cash flow, everything just helps, and that I think does provide some type of support um, for price on certain levels. Sure, it still can go down, 20 or 30%, and 50% in a big, crash or whatever. But I just think it's a different animal, at a certain point. Um, so in some ways, I feel like I don't know how you feel about this, Emmett, but like over the years, like you see this, I don't say it's a child, but you see this, like the people and how the greater market views, Tesla, the asset, it's changed radically. It's in the beginning it's scorned and it's just like completely just an ostracized like loser in the corner of the playground, right?
yeah,
And then it slowly makes its way where it has a some people around, and then it grows, and now it's like Tesla has become like almost in the in crowd, where it's
Mm.
accepted,
yeah.
maybe part of the student council or something, I don't know, but
Yeah, no, it's a good analogy. I think back to like, I'm thankful that we had Apple before this and Amazon before that. Like, I'm thankful that I've had that to reflect on and missing those
Mhm.
boats and witnessing it and being like, oh, too bad I missed that. And then you see Tesla come along, and I feel like a Tesla is a much more, it's so much more of a disruptor, paradigm shifting company than those two companies combined, even when all is said and done. 10 or 20 years from now, Tesla will be the company of all companies that everyone will always talk about as the biggest company of all time. And so
Mm.
we're kind of in the early stages of it still, in a way. Like maybe we're in the second or third inning, and maybe not in the fifth inning, like a lot of people probably think, or sixth or seventh. I think we're in the early days still of how transformational it's becoming. And on that note, I think like with just the main business we know of Tesla, the EVs and the batteries, which is really ramping up, and that's transformational in its own right. Not all the other stuff they're doing too, which is going to be crazy, whether it's AI bot or vertical and takeoff and landing planes or neural networks as a service, all these other crazy things they'll be doing. But the EVs and the batteries, and in that segment of business itself, this current valuation can support that in the future growing, and that this current valuation we're in that's growing based on just that business alone reminds me of like Apple 8 years ago. Soon after the iPhone came out, when people started realizing, okay, the iPhone's the best, and it's going to just keep gaining traction. Those discussions of BlackBerry, Nokia taking over are all long gone now. That's garbage, and Apple's just going to win out with like the highest gross margins in the iPhone. And so Tesla's kind of in that phase now from Apple 8 years ago. But the
Mm.
best thing about Tesla is they're going to be doing other things like that other than just the iPhone, whereas Apple stuck to just the, poor Steve Jobs left us. But if he was still there, I think Apple would have done other transformational things since the iPhone. The AirPods are pretty cool, but other than that, the iPhone is the greatest thing they've done. Yeah,
Yeah, it's funny. It's totally different magnitudes of like the smartphone, hugely important to the human life and communication and
yeah,
all the other things that it's opened up for sure, like the gig economy, for example. And then now you look at kind of the stuff that they're putting out. Love the AirPods, own the AirPods, but it's not to the same scale as, for example, transportation or energy is, right? It's like transportation and energy are on totally different magnitudes of scale when it comes to human life impact, I think over the
yeah,
long haul.
yeah,
And I'm almost a prime example of that myself. Is like I definitely was told by a lot of my coworkers back in the day, like Tesla doesn't make any money. Tesla, it pretty much just kind of go funds me with their stock price and uses it for like their mad scientist type of. And this is the perception I kind of carried for a long time. My dad was always telling me otherwise, but you know watching CNBC, same thing, and friends and family, but it really wasn't honestly, and I talk about this on the channel a lot until I drove in the car. I sat in the Model 3. My dad kind of forced my way in. He's like, "Come on, we're gonna go." I was like, "Okay, fine, I guess I'll go." I wasn't a Tesla bear at all, like not even close, but I just had this apathetic view where it was like, well, Tesla's okay, but like, they don't make any money. And I think the product, right? And we talked about this so much, is like the product spoke for itself to when I got out. And I was like, there's something to this. Like, I don't know what it was. It felt like, when you got that brand new iPhone 4 in 2011 and you opened up that little box and you're like, oh, this is like magical. Like, this like little unboxing of this. It felt similar to it. And, everyone looking at you driving an electric car, it was kind of like, there's something here that I should probably look into. And on that note, especially like it's going to get even more affordable because now stuff like hopefully this EV tax rebate credit will come past soon. Which, by the way, do you guys have any updates on that? Is that going to be happening imminently?
I've been following it pretty closely. Like probably 3 or 4 times a day. I'm like on it because I think it's a significant thing. But yeah, it's up in the air. I think Biden wants the House to vote ASAP to send it to the Senate, but progressives are holding back. Manchin, he's had some people at I think it's Wharton Business School or so, UPenn,
Mhm.
analyze the numbers, and they're saying that it's not going to cost 1.7 trillion, it's going to cost 3.5 trillion. And so there's a ton of stuff going on, and I think they're going to get it done. It's gonna be pared down a bit. Progressives will have to compromise a lot. And I'm actually getting more optimistic that the union part will be taken out. That's my guess. It just seems like Toyota and all these other auto companies are actually like, I was drilling down into the lobbying dollars that they spend, and they actually spend a lot of money, a lot of these other automakers. And so I think they're going to be lobbying like crazy, and yeah, their lobbying power is just going to be stronger than Ford or GM.
They have to
Stellantis.
survive. That's to survive. That's the only way they can survive at this point, right? They're in the last legs. Yeah.
Yeah.
Yeah, the whole union thing is crazy as well. But what really takes me off even more is like the hybrid and the plug-in hybrid stuff, where it's like, if you own a plug-in hybrid, great, that's awesome, good for you. But in terms of like maintenance and still having an internal combustion engine in the car still contributes massively to carbon emissions, right? So it's almost like you're doing all that work for less than an 8 kilowatt battery pack in your car. It just doesn't make much sense. I know they moved it up a little bit from where it was before, and people like Rob Maurer awesomely kind of shouting them out on Twitter and kind of putting them on blast, which I think helps. But it's kind of like a wolves in sheep clothing when we talk about that, because it's kind of like a subsidy for them to be able to still continue to meet the criteria that they need to meet, but then also keep their internal combustion engine plants going and all the manufacturing and not being able to having to lay people off, which I get because it's not the same skill set. It's just going to be super hard and really interesting in the next 2 to 5 years to see how legacy adapts or shifts to what is going to be a big consumer shift coming, especially with the 4680s coming out, and then the $25,000 model vehicle that Tesla's going to probably announce in the next year or two. Um, just yeah, are you guys at all bullish on legacy auto, whether it's Ford, GM, any one of them successfully transitioning, maybe Volkswagen? Loaded question, I know.
I don't know. I don't know, Dave. What do you think? I mean, I just think there's too much baggage with them. It's hard to sift through to even understand if they can be successful. That's my point. Like, I know Matt was trying to take a look through like GM's finance, just so many entities, so much, layering of disguise with the financials and credits and debts. And I don't know, just it doesn't sound good to me. But what do you think, Dave?
Yeah. I mean, I think this EV tax credit actually might help um, a lot of automakers because, again, the key thing is they need to reach mass production scale with one model. And right now they're not able to do it. They just don't have cost parity of Tesla, and performance is like not equal. And so, but if the EV tax credit passes, Tesla, increases their prices by at least $5,000 or more, um, and there's just not enough supply. Tesla can't make all the cars. This opens a door that these other auto manufacturers didn't have before, where they have all this demand that they can actually sell EVs at a profit. And this actually gives them a foot in the door where maybe they can actually make a model that gets up to mass production, 300, 400,000 vehicles. They tap into the economies of scale, and they actually make a sustainable brand, product. And this is actually, yeah, I don't want to I think the tax credit is excessive in the amount. I don't think people need it. But if you're going to save legacy auto, give them a chance to, switch over to EV somehow. This is one way to do it. You give this crazy massive tax credit, and Tesla can't supply because there's too much demand,
Mhm.
and other car companies have a chance, of making something. So we'll see.
Yeah, I think what's so deceptive about the whole case study, we'll look back on Tesla taking over the auto industry in a large degree, is, we'll look back and realize that everyone thought that, a car is a car. One's just an internal combustion engine, the other one's battery, but it's really such a different thing. It's a large computer on wheels with, with software that's, so important, and it's just a completely different thing to manufacture and build. And Tesla, optimized from scratch how to build them. And so the auto manufacturers, for them to kind of like pivot 180 degrees from building a refrigerator to now have to build an oven. It looks a little bit the same, but it's a completely different thing. It's like, it's much more to ask of them than people realize. I think too many investors, all this time, and to the legacy automakers' fault, they've been false. They've had to market themselves as being part of the future to keep their stock prices buoyed and keep their own jobs. So everyone just kind of fall into that trap of like, oh, we can do it too. It's just another car, but powered by batteries, and we've got deals. But it's just such a different thing. It's deceptive, and I think that realization will be widely accepted in the future.
Love it. And a couple of rapid fire questions just to end this off. I'm just gonna have three questions. Kind of just it can be brief or it can be extensive. It's up to you. Tesla split, yay or nay? I'll start with Dave.
Next year, maybe mid next year, I think it's appropriate. Now I understand that the stock price is high, but yeah, at this point, I think Tesla should just push it off as far as it can until they really feel like they should. Just my opinion.
I think they could split this year and next year. They could do a 4-to-1 split this year, another 4-to-1 split next year, potentially, or the year after that.
Mm.
Highly successful companies do stock splits, at their fastest rate of growth, multiple times, not just 2 times, not just 3 times, sometimes more, over histories. And so we saw our first ever Tesla stock split, last year. And that was like, wow, Tesla splitting. It's like amazing. But that's just the first of many in its future, so wouldn't surprise me if they do another split very soon. I'm neutral on it. Eventually they're going to do enough splits, and whether, I'm not even saying the stock's going to go up next time they announce a split. I mean, it might go up because we all think it is a self-fulfilling prophecy, but wouldn't it be, wouldn't it be like the market fooling us again if the stock actually goes down 10 or 20% when they announce a split, because maybe so many people have been speculating on it. I don't know. So I'm not like saying they should split because I want the stock to go higher. I'm just thinking it just makes sense for them to do a split soon, sometime soon, when we're of over $1,000 a share convincingly, because that's when Elon wanted to do it last time.
Okay, perfect. And we know Apple's MO, it's buybacks and splits, right? Since kind of a long time. Obviously, they have a dividend. Second question, and I think I would know the answer that you guys are going to give, but I'd love to kind of, if you guys can just touch on it a little bit more. Buybacks. Tesla sitting on cash. Yes, there's going to be a lot of cash putting into new factories, and Tesla is putting cash, but we've seen Shanghai being paid off in a year and a half's time from going up. Like, obviously, free cash flows there. Thoughts on Tesla doing any share buybacks in the coming couple of years' time?
Yeah, almost 0% chance, I think, any share buybacks happen. It's just Tesla. I mean, in the next few years, they have so much stuff they can do and wants to do. They want to do with their cash. I mean, I think Elon is like, the thing is, he has a gift with focus, and he has a gift with like this objective thinking of odds and goals and the future scenarios of how things work out. And I think he understands that if he goes all in with batteries and all in with AI, all in with manufacturing, then it's just like, it's so obvious to Elon. It's just like it's like 1 + 1 = 2. It's so clear to him that you just double down on these key areas, and good things are going to happen. And he already knows the market size. He already knows, like, there's no really clear second place players in all these areas. And so their cash is tied up for a while. But I think the question is more on the 5-year to maybe 8-year period where these they don't know what to do with all the cash flow, because it's just crazy. If they're making 50 billion a year possibly, and they can only spend 20 billion or something, it's like, what are they going to do? Then maybe buybacks or dividends start to make sense. But yeah, it's going to be crazy. It's going to be crazy if and when Tesla starts buybacks. It's going to be like this dwindling supply effect, and yeah, that's definitely, I mean, yeah, something interesting. Yeah.
I agree with Dave. As long as Elon's in charge, no buybacks, dividends possible in the future. But I'd say, when they're generating enormous cash, too much to spend, they'll more likely, I would say, buy up, like, for vertical integration, like buy miners for whatever the rare earth materials are that they're using, and or build their own mining companies or whatever. They'll spend that way to help vertically integrate their own industries they're kind of building out. But yeah, at some point they might have too much cash generation to figure out what to do with. And buybacks or dividends, I would say dividends over buy, but that might be 5-10 years plus away, maybe as soon as 8 years. I don't know, but it could be sooner if Elon, something happened to him, like something happened to Steve Jobs, obviously. Then you get more financial engineering people involved, and trying to keep the stock price going up.
Yeah, it was more of an MBA question, because I know he's surrounded with a ton of those kind of people. Last question I'll leave you guys with is, what's the single biggest, you guys can cheat a little bit if there's a couple, but a single biggest catalyst that you're excited for Tesla in the upcoming 12 months? Start with Dave.
So, I mean, there's two. So one, on a company level, it's the 4680s. I just think that is the true game changer, because that changes range, it changes cost, affordability, everything, performance, the ability for Tesla to ramp new factories. I mean, if it goes well, then it like radically changes Tesla's growth trajectory. So on a company level, that's probably the biggest thing. On a stock level, and I separate that, on a stock level, I think it's the financial results once Austin and Berlin start ramping in significant quantities. And I'm expecting Q3 to be that kind of quarter. So Q3, so probably, October reporting next year, to be kind of this blowout, just surprise. It could happen earlier if they ramp earlier, but I just think give them a couple quarters, to ramp. So Q3 next year, yeah, I think it's going to be pretty crazy.
Agreed.
My biggest kind of surprise catalyst that I don't think enough people kind of give leeway to or attention to is, we all talked about it a lot in the beginning for like a few weeks, but it's kind of been forgotten about for the most part, is the AI bot. And he did mention that they hope to have a working prototype in a year, at AI Day. So if he sticks to that timeline, Elon time might be 2 years or whatever, but if it sticks to the 1-year timeline, they have a working prototype they show and like start taking orders, like that's going to blow my mind. I'm going to be like, at that point forward, I'm going to be talking about that as much as or more than the cars. Like, I'll be like, wow, I'm ordering 10 of these AI bots, or I'm, these are going to change the world in all these other ways. Our imaginations are just going to go crazy over all these ways these AI bots are going to be used. And worked. And so that's my biggest surprise catalyst in the next potential 12 months, I'd say, just to get people thinking even more imaginably about Tesla's possibilities.
Mm.
And there's so many other things we all are aware of, like Dave mentioned, the 4680s. That's the most concrete catalyst, I'd say. That's upcoming. Full self-driving.
Mm.
As long as the regulators don't stop it in the U.S. first, which it seems like there's people fighting against it, but it'll happen in China or elsewhere, if not in the U.S., and it'll become a catalyst one way or another. Um, and yeah, the ramping up of the factories. Yeah, those are all great catalysts as well. Yeah. What about you, Joshua? What do you think?
So much to look forward to. I'd say probably the $25,000 model details, whether it's to unveil or expectations of timeline. I think that's the next step change for Tesla to enter a market where, you have anyone and everyone can buy a Tesla, whether it's new or in 5 years a used Tesla at like a depreciated value, if it depreciates.
Yeah.
Um, and like I think that's probably the biggest one. Although that goes hand in hand with Dave's point of 4680s. It's all dependent on batteries and what kind of happens there. But just gotta say, I mean, we're blessed to be in a position where there's so many catalysts coming up and so much good to look forward to. Yes, there's probably going to be dips in the road here in the immediate term or the next couple months, or getting these factories online and bureaucracy. But zooming out, which I appreciate both of you guys for a lot, is like the ability to zoom out. And sometimes I get stuck in the weeds a little bit, and to be able to zoom out into a decade's timeline, right?
Yeah.
And to look at what is happening, and it's definitely good times. So
Yeah, like we can kind of imagine what might come the next 2 years, right? But beyond 2 or 3 years, it's very hard to imagine how successful Tesla might be becoming at that time. Like we don't think about it as much. But I like to try to think, okay, in 2 or 3 years from now, what am I going to think is going to be so successful 2 or 3 years from then,
mm,
right? And so, when you think about that with Tesla, it's super exciting.
yeah, absolutely, 100% agreed. I'll let you guys go here and want to respect your guys' time. Thanks for coming on the channel, both of you guys. It was a blast. Too bad Tesla didn't rally like it did the last 3 weeks here, but a great week regardless. I mean,
Fine, great
finishing
week.
a huge weekly green candle again on Tesla, finishing at 1222. And let's see if the gamma squeeze theory might be proven right on Monday. But thanks, both of you guys, for coming on the channel.
All right.
Yeah,
Thanks,
thanks.
Josh.
Yeah,
Talk to
thanks.
you later,
Thanks,
Emmett. Take care,
Joshua.
man.
All right.
Take care. Bye, guys. Thanks everyone for
Bye.
watching. Thanks for all the super chats coming in. Jeffrey, Halford, Bradford Ferguson, and Stan. Thanks so much, guys. I appreciate it, and I'll catch you in the next one. Peace. Thanks, guys. That was awesome.